Welcome to Ty's Daily Market Update. I'm Ty Wong, reporting from New York, and it is Thursday, August 20th. On a CNBC interview, Bessent said that the buybacks may be more than $4 billion. They could double it or more, depending on what they think is necessary. He said, "We have a big toolkit, and we'll see." And part of it is signaling here and to show that we believe that the yields don't reflect the underlying fundamentals. So what the concerns that have yields up so high in the back end, wide fiscal deficits globally, not in just the U.S., inflation worries amid the war in Iran because of energy, and supply pressure from a surge in borrowing from the AI industry. U.S. national debt hit a record $40 trillion last week. So the Trump administration is planning to announce this week or beginning of next week an increased focus on fiscal consolidation, looking at both revenues and costs. I don't think there'll be a lot of cost cutting, especially since we're spending money on the Iran war and we're heading into an election. So I don't think there'll be anything drastic. So what he's saying is, so we'll see. That's injecting uncertainty into that trade in the back end. It's saying, you don't know what I'm going to do, but I know what I'm doing. So be careful, don't go overboard. If you push too hard, I'm going to push back as hard as I can, which for a man who used to be at a hedge fund and who knew how to work governments, that's a substantial threat. Now, I would say that the bond vigilantes, as I thought yesterday, are fighting it today. The 30-year yield is up about 5 basis points, about half or a little bit more of the complete drop yesterday. Now, I saw a headline about this. I looked into it a little bit more. And Axios, what I like about Axios, even though they have a little bit of a liberal lean, they have really good contacts in Washington. So I pay attention to what they say. And they're saying that U.S. is conducting a stealth operation to transport oil through Hormuz. The U.S. military has quietly established a shipping corridor in and out of the Strait of Hormuz to transport millions of barrels each day. A notable success, even though the broader war remains at a stalemate. So under the operation, which has been underway for the last several weeks, 15 to 20 tankers have entered and exited the strait each night through a southern channel along the coast of Oman. So that's about 10 million barrels of oil a day, roughly half of the pre-war volume being transported out of the strait and into the global markets. That's important. That's actually a big deal. The effort goes beyond escorting outbound tankers with oil on board. The U.S. military is helping empty tankers enter the Gulf from the Arabian Sea through the strait, pick up oil from country regions, and then exit. The full details of the operation have not been previously reported. We've been controlling the southern lane of the Strait of Hormuz for 2 months now. The Islamic Revolutionary Guard Corps can be a nuisance, but they don't control the strait. We do, a U.S. official who has direct knowledge of the matter said. So apparently each night the ships are scheduled to move in one big outbound line during a certain time slot and one big inbound line during a separate time slot. So instead of escorting specific ships, which is logistically painful and difficult, they're escorting groups of ships at the same time. The operation was made possible by a recent 2-week U.S. Central Command military campaign that degraded Iran's radar and maritime surveillance systems. So apparently, at night, they can only use small boats. They don't have a lot of radar to be able to figure it out. So you haven't heard a lot of this from mainstream outlets. And if you think about what's getting through the Red Sea at less than 5 million barrels a day like it was a few weeks ago before the Houthis got involved, maybe about 2 million, you're getting a reasonable amount of oil through. So given this, I think the price of oil is starting to get a little high. So here's Brent. Brent is up 2% today, but if 10 million barrels a day are getting through the strait, this is starting to feel a little bit elevated. Once again, here's where we are. I don't know that they're going to sell it off aggressively tomorrow, but at this stage I think it's 94 or so in Brent, I'm not sure you're a big buyer into the weekend because what else is going to happen? Okay, gasoline, heating oil, gasoline up 0.7%, off the highs, at least in futures. High diesel, though, and this is near the highs, could filter into inflation over time. So that's maybe more the important one. Okay, gasoline prices up a couple of cents from yesterday. We're back at highs right here from July 31st. So you could hear noises from the president. Again, not everywhere in the country, mostly in the west and the and sort of the northwest is where it's relatively high. Well, in any case, going up. In New York, looks like they've been about the same. Okay, Bloomberg reporting Walmart reported earnings before the open slides after the slowest sales growth in 6 years. Their quarterly sales fell short of expectations, a rare miss that's likely to stoke concern about the leading big box retailer decelerating along a slow-growing U.S. economy. Sales at U.S. store open at least a year, which is what they always look at as a benchmark, excluding fuel, rose 2.6% in the second quarter, shy of the lowest estimate compiled by Bloomberg. This is the slowest in more than 6 years. Walmart shares fell as much as 8.7% after the open. So basically, Walmart flagged that its pharmacy business weighed on U.S. sales due to federal negotiations that have led to lower drug prices. Shoppers spent less per trip during the quarter than a year ago, though the number of transactions stayed at similar levels. They said that the pharmacy thing won't be continuing, but it will go through until next year. Now, apparently, Walmart is the country's biggest retailer. It's a good economic barometer. Shoppers have maintained spending at consistent levels in recent months, despite ongoing concerns about inflation and geopolitical tensions, but lower income households have pulled back amid elevated gasoline prices. Now, on the numbers, Walmart actually had a nice beat on earnings and just hit the revenue numbers, but sales growth slowed, and that's what the market is focusing on. Something else that I wanted to look at, this is from the FT, which is paywall, but I found this chart on X. AI. So this is a chart of AI-related investment in the pink and the U.S. consumer in the blue as a contributor to U.S. economic growth. So you can see in the blue, most of the time the U.S. Up through the second half, the middle of last year, U.S. consumers were contributing between 1.5% to 2% to economic growth, right? Growth, not total growth. And this year it's been a little bit lower, just above 1.5 here. But look at the move in AI. AI-related investment below, really below 0.5% until early last year. And then now it's almost equal to consumers. I don't know if we'll get to right where the consumer is, but it's cool, and it's a big contributor to how much they're spending on AI to the growth in the economy. So taking a look at the Walmart chart, big drop here, 100-day moving average. It's a 37 forward PE. People will shop at Walmart. They won't stop, but it's not a real bargain. I'm not sure I would really sort of buy it here. I'm going to keep an eye on it. I think that you might get value, at a lower level, but maybe not quite here. We're looking at crypto. Crypto has had another amazing day after a very quiet period. Another amazing day today. And Investors Business Daily reports a Bitcoin price spike above 72,000 on Treasury fuel short squeeze. Got up as high as above 72,000, and it's up more than 9% over 24 hours. More than 1 billion in cryptocurrency shorts were wiped out within an hour during the sharpest part of the move, CoinDesk reported, and 3 billion in crypto shorts liquidated over 24 hours through early Thursday, according to CoinGlass, including 1.8 billion in Bitcoin shorts and 1.2 billion in Ether shorts. This is a big number because Ether's market value is probably a sixth of Bitcoin. People are pointing to the fact that the White House is trying to push crypto in the Clarity Act again. That's not going to get voted on until September 15th when the Senate comes back. And at this stage, I'm not sure it has the votes to pass. So this is still a short squeeze. I wouldn't worry too much about the Clarity Act. I don't think that has that much of an impact, but it's lasted a bit longer than I thought. So here's the CoinGlass, the last 24 hours, right? Ether, a market cap of 280 billion. The liquidation was 700 million compared to about 700 million for Bitcoin, but their market cap is 1.5 trillion. Now, this is a vicious spike. It's a 20% move in 2 days. If you were levered, you had to either add margin or liquidate. Basically, if you had like 3-to-1 margins, so if you include your original stake, it's 4-to-1. A 25% move will wipe you out. And I think a lot of people were happy, very happy short Ether here, and they're paying for it right now. Now, after all these shorts are out, I don't know how much leg room we have here. We get above the highs here. We may have a little bit more room to run, but I'm not so excited about crypto yet. But this has been painful for shorts. Okay, Korea. Well, SK Hynix to the rescue. They're buying back, I think, about 30 billion of SK shares, but they're not just buying them back to keep them. They're buying them back and canceling them, so that it's like reverse dilution. You're concentrating it. Cost. I think they were up 11%. The index was up 6%. Let's see if this changes the thinking, if they want to do more, or if Samsung does something like that too, to fight the fact their PE is only like 6.5, which for a company that's making amazing amounts of money seems very, very low. Okay, where are we in the markets? Bonds, like I said, are retracing some of yesterday's gains. Yesterday we had 30-year drop 10 basis points. It's backed up 5.5 basis points, and all along the curve here. Not a surprise, because they'll see the bond vigilantes are fighting, and they'll want to see what Besant actually does. The dollar is bouncing a little bit, 0.1% after a big drop yesterday. The metals are a little bit mixed. Gold, off the highs, but not far from it. Silver is still higher. Platinum is a little bit higher, and palladium is unfortunately the redheaded stepchild here. Equities are grumpy, down 0.4%, not looking for good news. And crypto, as we said before, still rallying very strongly. Here's Ether up, according to this, 12%, and Bitcoin up 6%, strong. Okay, NASDAQ, looking for good news. Leave me alone. The S&P 500, it's like sort of what you're looking at. You see all these red candles, that's the price action during the course of the New York day. Not a lot of interest, not a lot of buying right now in the second half of August. A lot of red here, energy's leading, but most things are down, although technology is flat. To give you an idea of how thin I think the market is, the train station parking lot this morning was literally half full on a Thursday when it's usually completely full. That tells you how many people are on vacation. Okay, FOMC minutes, I didn't spend a lot of time on it because it was quite hawkish, but that's what happened on July 29th. And since then, we've had a weak payroll number, a very weak payroll number, and soft CPI. I think that's information is just stale. Jobless claims, initial claims, certainly at the lower end of the range. Very strong read in Philly here. I mean, I think this is the strongest in several years. And so we'll have to keep an eye on it. I mean, if this is just a 1 month thing. Well, thank you so much for watching. I'll see you again tomorrow.